Let's welcome on board then Sanjiv Bhasin, who's joining in on the show. And Sanjiv, going by last week's data, the case is being made stronger that now maybe more allocation to large caps can be preferred given the muted move that we've witnessed within the broader universe. Your views?
Yeah, good morning, Awan. Well, that seems to be the key. And when large cap, when foreign money returns in the ETF flow or in direct investment, it will always chase the large caps. We've had a large underperformance as far as Bank Nifty or the heavyweights, particularly HDFC and Reliance. And I think there is a catch-up trade there. So rightly so, I think the Nifty or the Bank Nifty will be more constituent in an upside, and mid caps could take a small breather, but the market breadth is telling you something else. So if there is money on the table as we discount these events, I still think the mid caps will be market performers, if not outperformers. So yes, large cap banks are looking extremely good, and a select stocks in the PSU basket also deserve attention.
Right. Sanjeev, hi, morning. While of course it's a case-by-case story within individual stocks, but for those who are in the money, and that's pretty much everyone when it comes to mid and small caps, would you say stay put or book profits?
Yeah, good morning. So Aisha, a few clients called me a few days back and they were thanking me for the move in GMR from 35 to 60. And then they said the 2 days back that they booked profits and they lost out on the last 15%. So I don't know the last 15% when it comes. GMR jumped 15% in a day. And I think that the last mile recovery is still there. So stay put, book a bit of profit, get into large caps. There is nothing called sitting on cash because this is a bull market. You will have enough opportunities maybe coming your way, but you have to see where you can deploy your cash. So I still think like select pockets are going to be outperforming, but in the broader universe, I would still put money on the large caps because I would be having more assurance on earnings, on price multiples, and safety of any correction. I think in the next correction, mid caps will have a faster leg than the large caps.
I will come to large caps, Sanjeev, but have to discuss GMR Airports first. And given their newest investment by GQG, which is famous to catch stocks and companies at their bottommost, you think it's still a buy even after the jump it has had last week?
So Aisha, I used to tell everyone, look at the rush at airports. आप देखेंगे कि आपको you don't have place to stand, and people used to take that in a lighter vein. Well, it's up and running at 70. Also, if you see AeroCity is booked to the hilt, there are no rooms available. Hotels and weddings go sink, and the airline business is doing the best it is ever. You've seen Indigo hit all-time highs and so on. So I still think there is juice in the upside, but a large part of it may be now in because these type of large players, when they come, they do make a top for the time being. You've seen a similar case in IDFC First and so on. But let me tell you, GQG is laughing his way to the bank because he had the courage to buy, Adani stocks when there was no buyer. And that's why when he's laughing his way to the bank, the risk taking will be even more. So you do your own gauge on your risk taking capacity. But I still think GMR can, maybe scale 85 over a period of time. However, it's a caveat that if you have those stocks, please book your some profit also because these are volatile stocks of infrastructure dependent on a lot of moves. And I think that, this last move has been caught everyone by surprise.
Yeah, absolutely has, right? That 12% stake buy, almost a 12% surge in the stock on Friday alone.
Sanjiv, from a stock market perspective, what's the view on the likes of a JSW, Tata Steel, JSPL, etc.?
Correct. And Aman, I think this is now going to be an outperforming sector since we realize that the dollar weakness is here to stay. And I see no recovery. I mean, I would say the dollar is going to double digits over a period of time, which means, combined effect of China comeback and steel production at a high, plus the infrastructure story in India means steel is going to be a very, very key conduit. In fact, all ferrous, non-ferrous metals are looking very good. So buy a basket of stocks which include JSW Steel, Jindal, Tata Steel, not to mention that SAIL has gone into 3 figures and that could head towards 125. And please add Hindalco as also a play over there because I think Novelis is performing brilliantly. So a basket of stocks will do well. We, as a disclosure, have Jindal Steel and JSW in our portfolio.
Why Jindal Steel and JSW? Why not Tata Steel or SAIL?
So, Nikunj, we thought that these are better outperformers as far as numbers go, and they were showing you more traction on their margins. JSW, as you know, is the best integrated play in the country, and Jindal has reduced debt substantially. So, return on equity became very, very important. I am not doubting Tata Steel or SAIL, but as a preferred choice, we thought these are two stocks or two corporates which can be outperformers.
Sure. Sanjiv, you're now tactically moving higher allocation and fresh buys towards large caps. Give us three other names other than what we've talked about where you think one can buy still.
That's $1 million question, but I still think Ultratech is headed to 11,000. And I would say that, your whole gamut of gas authority, the city gas distribution companies, I'm very bullish on on MGL, on Gujarat Gas. These are two names which we like. We like GAIL in that space. And not to forget that in this commodity space, Hindalco is one stock which has already scaled new highs. I think the ferrous, non-ferrous business, both for them on the CT, on the copper smelting part, where the treatment charges, refining charges may be at the highest, and plus Novelis has been an outperformer. So these are 5-6 names which we think can be outperformers.
Sanjiv, you've talked about your preference towards large cap banks, but within the smaller ones list, would RBL feature in there?
Yes, 100%. And I came on your show and I said if there was one mid-cap bank I'd buy in this correction when the RBI move came, it would be RBL. We own it in our portfolio. The RBL has no stake more than 1.5%, and Mahindra comes and buys 4%. This bank is going to be an outperformer on the sheer weight that there is no strategic ownership now. And Mahindra, whatever they may say, there is a strategic interest of upping their stake in financials, and the best conduit could be a bank which is actually, no stake over there. RBL's earnings have improved. The new chairmanship of the SBI person has been exceptionally well. And I think the present management, then their focus on the NBFC side has been huge. Their finance arm has opened more outlets in the last year than in the last 5 years, which is telling us that their credit expansion or their book and NIMs will be very, very strong. So I would say this is headed for 350. As a disclosure, this is in both my personal portfolio and in our client portfolio.
A lot of news flow around the sugar sector last week, Sanjeev, and clearly the government, pouring cold water on sugar mills' ethanol dreams. At least that seems to be the understanding as of now. What do you do now? Book out, or would you say buy into the decline? Because this seems like a temporary move. Ethanol is not going anywhere, and sugar stocks will be beneficiaries.
Correct. So, Aisha, the issue is that right now there is a lot on the table, and you can choose between other things which have more transparency, more earning visibility, and where there is more, space on the upside. Sugar has been a big outperformer, and I know for a certainty that the molasses or the baggies part of sugar, which is left out of the blending, is being lapped up for more, industrial use and so on. So, in the end, Balrampur is one of the biggest blue chips, and it will find some buying succors. But in the meantime, people would prefer to get into large cap banks and other stocks which have not done much. So there is a rotation going on. I would still say if you have the sugar stock, stay put and buy only when the consolidation takes an end. That is why you will, or do a systematic SIP and try and add some of the big names, particularly EID Parry, DCM Shriram and Balrampur Chini.
Okay, fair enough. Thanks very much, Sanjeev, for sharing with us your thoughts and giving us views on your recommendations.